everybody, this is Camille Jayne again, founder of Matters at Hand, and today we're going to go through tab 3 of your What You Need to Know kit for wealth management. And tab 3, if you'll recall, is entitled Take Care of Your Assets. This is all about your investments, your real estate, yourself. So unfortunately, it's a little more advanced estate planning. If something should happen to you, this is taking care of your assets. And the first thing in tab 3, you'll remember in tab 2, we went over your living trust, which is taking care of you now. In tab 3, it's going over specialized trusts, which are all irrevocable trusts. You can't change these once you draw them up, once your estate planning attorney draws them up. But they're very, very important because once you get your assets out of your own name and off your own balance sheet into irrevocable trusts, they can be protected from estate taxes. And that's really, if that's important to you, not giving your 45 cents of every dollar of your assets to the government instead of your heirs, that might be a good section for you to read. So one of the most common irrevocable trusts is the Irrevocable Life Insurance Trust, the ILIT. So we start in this section with that charitable trust where you can get income from your assets, and then when you pass away, they can go to the charity of your choice. Grantors trust, where they can go to your heirs while you get income. All that is in this section, and it's really important for you to read this. So they're very short, they're very succinct. So when you go in and meet with your estate planning attorney, you know what all that's about. The next section in here is life insurance. Again, life insurance is after you pass away. It is protecting your assets. Many times you'll have to pay estate taxes, and you can have a life insurance policy that can go to, the death benefit can go to paying the estate taxes. If it's in a life insurance trust, again, as we said, then it won't be estate tax. So this goes through all different types of life insurance. One question in here we always ask is, do you own or do you rent your life insurance? If you rent it, that's term life insurance. Many times when you're younger, when you're, let's say, from 25 to about 50 years old, you might have term life insurance. So God forbid, if anything happens to you, you can provide for your family or your significant other if anything happens to them. Permanent insurance is more where cash value builds up and it never runs out. Term life insurance you buy for 10, 15, 20 years. Permanent life insurance, premiums are a little bit higher, but it goes on until you pass away. So all those different types of insurance in here, the different types of term insurance you can buy, the different types of permanent. This is very important. I would say that most people like having life insurance. You even might want it so you can leave money to your charity. But you need to read all these definitions so when you go in and talk to your life insurance broker, you understand what he or she is talking about and you get the right insurance. The next section are investment management. This is really just a whole bunch of definitions. So you can see when you're talking to your investment advisor, all the different sort of vehicles that they might want to put you in. You have a really good understanding of what they are. And after we did all the definitions of investment, and even if you're an employer, this is very important because it talks about Roth IRAs and 401ks and pension plans and KIOs if you are your own business owner. So that's very important in this section. We also thought it would be important, many of you might have partnerships with other folks, business partnerships or real estate partnerships. So we have a section in here that talks about how to structure the different partnerships. I don't know about you, but off the top of my head, I don't know the difference between an LP, an LLP, an LLC, an LC, an FLP, and that's all in here. So I think that'll be very helpful, as well as buy-sell agreements, which all of you should look at. Another section in here are the tax overview. Again, you can get hit with up to 8 different types of taxes during your lifetime and after your death. So again, these are basically definitions. So you work with your CPA in terms of how to do strategic planning. Your estate planning, your wealth management is very strategic. And you and your CPA and your estate planning attorney and your financial advisor should all work together on this. The last section in Take Care of Your Assets, actually, it's not the last section, property casualty and umbrella insurance. I don't think we've had one client where their property casualty and or umbrella insurance were correct. Everybody's had something wrong. They are underinsured, they're paying way too much. This is a really important section, so it goes through auto insurance, homeowners insurance, umbrella insurance, If you are a board member on a nonprofit board, that is really critical to look at this section as well. And then we have long-term care planning. Long-term care planning is really taking care of your assets, because it's not about you having money to be able to pay for someone if you need in-home care. It's about not wanting to deplete your assets so that your children or whomever can inherit. So that's a really good section. It talks about a lot of the discounts you can get. You get a discount on your premium if you're married. You get a discount on a premium if you just live with somebody and you're not married. So that's, who knew? That's very cool. And the last section in here is about appraisals and getting the right sort of appraisals on your homes, on your businesses, on your jewelry, on your fine art, on your collection. So take care of your assets. It's probably the biggest section in the book, but it's really important for you to understand so you can plan ahead. So for all those things that you've worked really hard for, they get to stay in your family. Talk to you later.